What's so interesting is the moon music around crypto has been pretty dire in the fiscal fourth quarter. But have people been turning and using stablecoin even more? Adoption been growing because of this sort of volatility? Have people exiting Bitcoin and wanting to hold USDC instead?
Well, thanks for having me on. And I would sort of start by just saying, if you look at the arc of 2025 and the success of, legislative initiatives like the Genius Act, the awareness around stablecoins as a key infrastructure that can be used in the financial system, in payments, in capital markets, and the incredible growth, which are obviously showing up in our full year and Q4 numbers. What we've seen in some respects is stablecoins as a technology, as a use case, decoupling from digital asset markets, or decoupling from, just, speculating on the price of Bitcoin or things like that. And that's something that we've believed for a very long time, is that blockchains, stablecoins, and now as we see this kind of collision of this with agentic capabilities and agentic computing, are creating utility for businesses and financial institutions and households, and that's driving this shift. And so I think the market is just starting to understand there are, internet financial platform and infrastructure companies that are building for this new economic system that's built around real world money like USDC and this and blockchain technology. And then there's a different market which is certainly more speculative about digital assets more broadly.
Jeremy, that's so interesting because look, we've just had the news reporting that maybe Meta's back on thinking about how adoption of stablecoin is going to work within its own platform. Talk to us about how you're diversifying, because yes, you can do a lot with stablecoins and indeed putting money into US Treasury assets, but where else for the business now?
Well, a couple things. I think the first is that our core business is thriving. USDC grew 72% year on year. The amount of transactions happening in Q4 reached nearly 12 trillion. That's up around 250% year on year. Our market share has grown. We're nearly 50% of all stablecoin transactions happening in the world, and it's spreading, meaning it's the Intuits of the world, it's the JP Morgans of the world, it's the Visas of the world, it's payroll companies, right. So many companies that are there. So that is strong and growing, and we're still in the early stages of that. But we see the opportunity as much larger. And so for us, to your question, we're kind of going down the stack by building operating systems for this new economic system, operating systems that can support agentic applications, broader financial applications through Arc. We're going up the stack by building applications that are useful to any financial institution that wants to plug into this and make this kind of the pipes for how they move money
Jeremy,
around the world.
Can you be a little bit more granular? You talked about overachievement, right, in new revenue streams. Where and how did you achieve that?
Yeah, so specifically in new revenue streams, we saw other revenue, which is includes subscriptions and services revenue, includes transaction revenue. These were completely new lines of business a year ago in Q4 of 24. They grew 15x to $37 million of revenue in the quarter, and we've also given some guidance around 2026. We see them growing, another 50%, and so
right.
This includes product and partnership work that we do to take the stablecoin network technology we have and make it available through partnerships across more and more blockchain networks. This includes transaction fees that are charged for different services that we offer, and so there's a mixture of new revenue streams in there, and we have not really yet turned on revenue from major platforms like CPN and Arc yet, but we're encouraged by that growth, and that helped our margin as well in the quarter.